What if I told you that one of the UK's oldest, most respected investment trusts, a company started way back in 1909, has basically bet its future on one of the most futuristic companies in the world? Well, today, that's exactly what we're diving into. The Scottish Mortgage Investment Trust and its absolutely colossal wager on SpaceX.
Okay, let's just start with one number, because this one number says it all. 15.4%. That's the slice of a massive £15 billion portfolio that this trust has plowed into a single, unlisted private company. And that company is SpaceX. I mean, a concentration that big in one asset is just almost unheard of.
So you have to be asking yourself, right? How on earth did a 115-year-old institution get here? And, probably more important for a lot of people, what does this huge, frankly unconventional bet actually mean if you've got money in it?
All right, so let's get into the weeds a little bit on this position, because to really understand what's at stake here, you have to appreciate the sheer jaw-dropping scale of this investment. So check this out. We're talking about a holding worth around £2.34 billion. But it's not just a big number. It's the dominance that's so striking. At over 15%, it's about 3 times the size of their next biggest investment. That means this single bet on a private rocket company truly defines the entire portfolio.
So how is this even possible? How can they make a bet like this? Well, to get that, we've really got to look under the hood. Scottish Mortgage, or SMT, isn't your average fund. It's a totally different kind of machine.
See, at its heart, it's what's known as a closed-end fund. Now, the only thing you really need to know is that it's a company in its own right, and you buy and sell shares of it on the stock market. And this means its share price can, and often does, drift away from the actual value of all the stuff it owns. Keep that little detail in your back pocket. It is absolutely key.
This slide really shows you the secret sauce, the engine that makes it all run. First, it has this incredible ability to put a huge chunk of its cash, up to 35%, into private companies. That's a door that's closed to most of us. Second, it uses borrowed money, what they call gearing, to double down on its bets. Now, that can turbocharge your returns on the way up, but boy, it also magnifies your losses on the way down. Then you add in super low costs and a system to buy back its own shares, and you've got yourself a very powerful, but also very risky, machine.
Okay, so we've seen the how, but what about the why? Why do this at all? Well, it all comes down to the core belief of the fund managers, Bailey Gifford. They have this philosophy they call patient capital.
And this quote, this is the key to everything they do. Their entire strategy is built on this one powerful idea, that just a tiny number of truly exceptional companies drive almost all of the stock market's gains. So their job isn't to spread their money around. It's to hunt down those rare, world-changing winners, bet big on them, and then just hold on for dear life. They don't just see a rocket company in SpaceX. They see the company building the entire infrastructure for a new economy in space.
And honestly, it's kind of hard to argue with the results that philosophy has produced. I mean, look at this slide. We're talking about legendary successes. They didn't just find companies that did things better, they found companies that changed the whole game. Amazon redefined shopping, Tesla kickstarted the entire EV revolution. This incredible track record of picking not just winners, but true market creators is exactly what gives them the confidence to go all in on SpaceX as the next one in that line.
But, and this is a big but, this high-conviction go big or go home strategy has a massive downside, absolutely extreme volatility. And this is where the real risk and a very strange kind of opportunity comes into play.
This chart, wow, it just tells the whole story, doesn't it? On the one hand, over 10 years, you've got an incredible 414% return, absolutely crushing the market. But then you look at a single year, 2022, and boom, a devastating loss of nearly 46%. This is the definition of a roller coaster. The very things that fuel those epic gains, that concentration and the borrowed money, are the exact same things that fuel the spectacular crashes.
Now remember I told you to keep that little detail about the share price drifting away from the real value in your back pocket? Well, this gut-wrenching volatility is a huge reason why. It creates this weird thing called the discount.
Okay, so first let's look at the net asset value, or NAV. When this data was pulled, if you added up the value of every single thing SMT owns, all the SpaceX shares, all the Amazon, everything, it would come out to 1,297 pence per share. That's what it is theoretically worth. But the price you would have actually paid for one of those shares on the stock market that day was only 1,188 pence. So there's a gap. You're buying all those assets for less than they're supposedly worth on paper.
And that gap is the discount. So what is it? Well, it's essentially the market's fear, priced right into the stock. Fear that the private stuff like SpaceX is overvalued, or fear of another brutal crash like in 2022. So the big question for any investor is that discount a warning sign of huge risk, or is it a golden opportunity to buy a pound's worth of amazing assets for, something like 92 pence?
So let's pull all these threads together now. We've got the structure, the philosophy, the insane volatility, and this discount. It all boils down to two very, very different potential futures for this trust. And guess what? Both of them hinge almost entirely on SpaceX.
Okay, the bull case, the optimistic view, is pretty simple. SpaceX goes public, it does so at a massive valuation, and that rockets the trust's asset value way up. Confidence floods back in, that discount we talked about shrinks, and the share price could jump in a big way. The bear case is the nightmare scenario. A delayed or disappointing SpaceX IPO forces them to write down the value, fear goes up, the discount gets even wider, and the share price could absolutely plummet.
So at the end of the day, the crucial point is this. For better or for worse, the entire fate of this 115-year-old institution, with all of its history, is now completely and totally tied to the success or failure of the world's largest, most ambitious private company. The two are just inseparable now.
And that really just leaves us with one final, massive question. Is this a visionary move, a perfect execution of a proven long-term philosophy that's betting on the next truly generational company? Or is it a reckless, over-concentrated gamble that's putting decades of success on the line for a single, high-stakes spin of the wheel? The answer to that question is going to define the next chapter for Scottish Mortgage.